Hello, I'm Laura MacPhee, Insight Editor at Pensions Insight and Engaged Investor magazines, and I'm here with Nigel Aston, Head of DC in the UK for State Street Global Advisors. Very good to have you here, Nigel.
Thank you, Laura.
So you've been doing some research recently on DC members and how they feel about their savings, and you've noticed some interesting trends amongst the attitudes of young people, so I was wondering if you could tell me a bit about that.
Yeah, well, we do two large pieces of primary research at a consumer level every year, and we're quite interested to hear how people interact with their savings, what their actions are, their aspirations, their attitudes, and how that plays out in the outcomes they get. Now, we had a hypothesis that young people, and particularly young people who had been auto-enrolled and were therefore new to savings, we had a feeling that they'd probably be more risk averse. They wouldn't like to see investment drawdowns, falls in the value of their fund. And this proved to be the case. So, for example, we noticed that almost half of 22 to 34-year-olds, what I like to call young people, they really didn't like to lose money. They found it very hard to rationalize that they wouldn't be able to touch this money until they were 55. They just didn't like to see one benefit statement being less than the year before. Now, what was really surprising was that the level of drop in value that they were willing to tolerate before they'd make some sort of action was much lower than we expected. So it was only 10%. And if you think of all the corrections in the market that have happened over the last 10 or 20 years, there's been quite a few occasions where the market's fallen by a lot more than 10%. So what we're basically saying is that if young people and people generally become aware that they're losing money in their pension plan, they take some sort, or they will increasingly take some sort of action. And that action is move to a more conservative investment allocation, stop contributing, or just opt out altogether.
So, what can schemes do to kind of manage the volatility or design some sort of investment strategy to help respond to this risk aversion?
Yeah, well, the trustees we speak to of large plans, the trustees of master trusts, and providers in the contract-based world as well, seem to be coming to the realization that controlling volatility is not only good for the investment outcome, it's also good from the behavioral point of view because it keeps people engaged and they don't lose the faith in saving at all. So the sorts of things that we're implementing in the plans that we work with are target volatility triggers. What that means is that if volatility within the marketplace rises above an acceptable level, we can move people very efficiently and very quickly into lower risk assets, typically cash. And what that means is we can smooth out the investment journey, together with the normal things we think about, which is diversified growth funds, a wider diversification across multiple asset classes and exposures, the sort of things that typically would be in DB plans, but now we're seeing increasingly in the more sophisticated DC plans as well.
So that's the pre-retirement phase. What happens post-retirement?
Well, what's been fascinating being at your conference for the last couple of days, to the outside observer, it almost seems like a target date fund conference. I think almost every speaker has been speaking about target date funds, target retirement funds, call them what you will. And I think, again, there's a growing realization that a elegant fund construct that can take you not just to retirement, but can take participants, members, through retirement might be the way of the future. So you can imagine a situation whereas instead, as has been in the past, that when you get to 65, you have to pick your money up and either buy an annuity or go to a retail drawdown environment. There could be in-plan drawdown facilities, and we believe those are best facilitated through target date.
Thanks very much.
You're welcome.